Hello everyone, welcome to the market update. My name is Kay Kim with the Traders Club, tradersclub.com. I wanted to do this quick market update on the S&P 500 index. I just want to talk about minor term market action here. Looking at the S&P 500 index here on your screen, this is daily chart, meaning each candles represent 1 day worth of data. And obviously what we've been seeing here, looking at last couple of days, you still have the flush there after that, island reversal, gap down right there. We flushed, came down, broken below this support at 2165, and then there was another support at about 2153. With some of the gap areas were all filled. You can see the last gap area at 2129. This was a gap fill support. We stopped right at that level. We flushed right through that 50 MA. You can see that dotted 50-day moving average, exponential moving average. That's what I mean when I say 50 EMA, 50-day moving average there. So we blew right through it. I mean, last times, remember the Brexit panic here? We did blow right through it. We even gone below the 100 SMA. This is 100-day simple moving average. But obviously, we found support at about 2001 level there. And there's a video on why the market bounced after the Brexit panic. I put out on YouTube and on my blog. But anyway, so, obviously we saw the V-shaped higher. And obviously, I think maybe a lot of people were anticipating something like that. So just, you can see on Monday we came to the market. We gapped down right at that 100 SMA at 2120, right? 100-day simple moving average right about here. That rising simple moving average right there. So we found support right at that vicinity. We got up. On Tuesday, though, we gapped down, came down again. Today, we're pretty much flat, kind of closing where we closed yesterday. But we're still staying above 2120 support, which is coinciding with that 100 SMA there. So that has been acting as support last 3 days. So you can see that's pretty important support there because going all the way back to prior resistance vicinity, right? This, you can see how many times. This is a very, very congestion level. I mean, we saw a lot of sellers back here. We saw seller here and here. And so this is a pivotal level here. So a lot of people remembers 2120, 2100. This, I think, just really though, this whole vicinity of 2120 all the way to 2100, this is going to be a very, very important level. And I've been talking about this last video as well. This band of support, 2120, 2100, this whole vicinity is very, very going to be very, very important. If the buyers wants to see this market sentiment going back, shifting back to bullish, I will say I want to see at least reclaiming that 50 MA. You can see that 50 MA, that 50-day exponential moving average, is actually sloping down slightly there. So what we need to see is, buyers kind of reclaiming that area, getting above that vicinity, and maybe using that as support, and then thrusting back up, getting back up to 21 and 870, and that would be the gap fill resistance, right? And anywhere above 21 and 70, I think that's a level where the market can really thrive. But we'll talk about that when we see the data that the price action is when we get there. But for now though, I think we're the 50 MA is acting as resistance, and we've got 100 SMA acting as support. So we kind of sandwiched between 50 MA and 100 SMA. Here's the thing though, going into next few days, we got 2 more days in trading, right? We got Thursday and Friday. I say if we get anywhere above 2150, I say it'll continue higher to retest at 2180.70. If we stay above it, close strong, this week, early next week, I think we were able to get up to 2180.70 there. But if we lose 2120, this is a level that we're holding last 3 days, right under 100 SMA, 100-day simple moving average, and 2120 level, I believe then we'll come back down to 2100 level. That's the gap fill area, gap fill support. You see that gap right here. That was open, July 8th. And then we also have a rising uptrend support right in that vicinity, colliding with that horizontal support. So even if we get below 100 SMA, I think that level would act as strong support there. I'm just going to do a little quick Fibonacci analysis for you guys. Just give you guys a little heads up here. So, I mean, anywhere below 2100, you can look at your Fibonacci, and you know, some of these levels can act as support. But let's not too get ahead of ourselves, though. At this point, I'll maybe do another video next week. But just I want you guys to know where our Fibonacci retracement zones are. And again, what this means is as long as I stay and or bounce above or at this vicinity that I'm just drawing here, this is a Fibonacci retracement zone that is considered as intermediate term higher low. What does that mean? What is intermediate term higher low? Intermediate term higher low meaning it's like this. Here, I'm just going to give you a quick tutorial on Fibonacci retracement zone. You guys remember how I call this, you know, how I call this, let's see here, Brexit panic support. You know, a lot of people are looking at this support right here, right? Say, wow, we're below this important support at 2140, 20 and 30-ish. And so a lot of people got triggered here to short or to, you know, get stopped out on their longs, right? So this is a classic trap on both directions. So where the market will trap buyers to get stopped out, and the market will trap the short sellers and put holders to initiate new position because knowing that it is below this support. This is the reason why, you know, a lot of newbies, a lot of people doesn't understand technical analysis. They only know the surface of technical analysis. And you guys don't, you know, a lot of people don't understand how deep it goes. They make common mistake. Well, just because it's below the support, it's going to continue low. It's not always like that. So what I did was, obviously, this is why Fibonacci analysis can be useful, right? So you can see that I just did measure that move. This is 100%, right? And then where does it come down to? What's the 61.8% right here? Here, let me make that large so you can see. I'll make it even red. And I'll make it super large right here. Maybe we'll make this large too. You can see, it's easier for you to see right there. You see that? So this was a Brexit decline right there. Okay. We got up. We pulled back. Where? To 61. Well, actually it's 38.2%. It's actually 38.2%. I do it this way so I can get my retracement at the top also, so don't worry about 61.8%. It's actually 38.2% retracement, right? But anyhow, this is the first level of Fibonacci retracement zone, second level, third level. So yes, we have broken below the support on that Brexit panic, and we stay below, and we close strongly, right, to the downside, but we are still above this Fibonacci retracement zone. And we created intermediate term higher low. That's what I mean. I'm going to go back to it and talk about this, but that's what I mean. What I mean by intermediate and what I mean by Fibonacci retracement zone, that's how the market moves. It goes up, pulls back, and then it makes new high. Higher highs, higher low. That's what higher highs, higher low means. So then you can see we made higher high, and then we're pulling back. So we're just going to do something similar here. What we're going to do is we're going to measure this move. Oh crap, hold on a second. Let me get rid of this. Okay, and then I'll put this back up here. So now what we're going to do, zoom in here a little bit. We're going to measure this move. And currently, as you can see, the Fibonacci retracement zone, again, this is 38.2%. I flipped it. Is basically telling us that 2120 level is important. Isn't that interesting? How market has been grinding last 3-4 days right on this vicinity we've been talking about. That 2120 is the horizontal support. It's the rising 100 SMA support. And now 38.2% retracement is now confirming that level. And I think that was a reason why last 3 days, and it was not able to push right through, and we've seen a slowdown there, okay? But again, we have 50% here, 61.8% there. But first things first, and we'll talk about this Fibonacci going forward should the market continue slower. So I'll give you an update on the next video, or on the next videos, should the market continue slower. So at this point, nobody knows. I do not know if it's going to move higher or lower. I mean, nobody truly knows if any of these support levels will act as support and will actually see a bounce. We need evidence of that. Remember what I said earlier, 20 on 50, then we probably can get to 20 on 80. Anywhere below 20 on 20, we're probably going to go 20 on 100. Because remember, we have rising uptrend support. So remember what we just talked about, that higher low. What I mean by the higher low with that Fibonacci, where my Fibonacci go? Right there. So this is a vicinity, meaning if we bounce to any of this level, it is considered as intermediate high low, meaning that we can create that higher low and then we can continue higher. So that's kind of what I'm looking at here. And I'm not sure if the 38.2% retracement will act as support. I need to see some evidence of that. As far as a candle is concerned, let's do a quick candle analysis today. Is we do have kind of a high wave doji, gravestone doji type of candle there. It is technically, a spinning top because we have a little bit of body, but we have properties of gravestone doji. So gravestone doji really it's a wild card. It's really don't know. It can be a resting pattern before just getting another down move, or if we see a gap up tomorrow, something like this, then that gravestone doji is now a reversal candle, and we could have a morning star reversal. Again, only if we have a strong bullish day tomorrow with the gap up. If we see something like that, if we close above that 50 MA, and if we close strong tomorrow like this, then we can say, hey, we have a morning star reversal, and there's a good chance this thing could gap back up to 20 on 80 and fill this gap. If not, this gravestone doji really means nothing. It could just mean that there's indecision. There's resting. Market is resting. There's a lot of volatility. There's a tug of war between bulls and bears. So really, nobody's really winning. And obviously, we're down a little bit, like 0.4%, 0.6%, 0.06% in the S&P 500 index. So there's but just really indecisive as of today. Does that make sense to you guys? So just quick market update on the S&P 500 index. If you guys been liking these videos, and the best way to connect with me is go to my blog at twotradersclub.com, and best way to go is the follow blog and put your email address there. So every time when I write an article or a video, then you would will get that into your email inbox. Or you can also follow me at Twitter and stock tweets at 2KKim. Until next time, let's see how this market behaves. Let's see how the market will react. And obviously, if you don't follow me on Twitter and stock tweets, I do kind of tweet out charts and stuff like that. Not every day, but kind of as often as I can, or as often as I see it fit, and kind of give you guys an update on some of the levels and stuff like that. So make sure to follow me. And I don't use dollar sign, not anymore. I decided I won't going to. Because I want to reward those who follow me. I don't want to just everybody to, and I get to a point where a lot of people don't even respect your opinion or analysis, and they're just. So I just don't want to be in that crowd where just there's so much crazy jungle out there, just throwing out all kinds of just nasty, just this I don't know, not sophisticated chart, just ignorant, just naive, and this untrained, unseasoned charts out there. Just people are just talking about all these different things that is really not a true technical analysis. They just kind of use technical analysis to support their position. So if they're long, they'll just go and say, hey, this is, I have these charts to prove that I'm long. You know what I'm saying? So I'm just kind of getting sick of that. So I just don't want to be part of in that group And so I thought, you know what? If you follow me, you can get a. If you respect my work, if you think that my chart is, is well seasoned and trained, learned charts for the market, then I welcome you to follow me and we can discuss. And you can always leave comments on my blog. But if not, I just don't really care to share to the world. So that's kind of how I've been thinking lately about that. So that's why I haven't been tweeting with either hashtag or $sign. So if you follow me on Twitter and StockTwits, you can interact with me there or my blog. Again, the best way it will be following the blog. That way you can get all the new articles and videos. Have a great night, and let's see how this market plays out. It will be interesting to see, if this 2120 level will hold, and we may see a bounce tomorrow, or if this thing continues lower, then probably prepare for 2100, that gap fill right here, and retesting that rising uptrend support. Also, we just talked about this Fibonacci retracement zone somewhere in that vicinity.